Perhaps now you're thinking we're going to talk taxes, and you're right, because 10 days into the new year's, have you started preparing your taxes yet? For some, January is the beginning of tax season, so is it too late to get in that last tax deduction? We gave David Peters an entire segment to get ready for this question. He's a financial advisor and tax expert. And David, okay, is it too late?
It's not too late, but the number of opportunities, the number of plays on the board are few at this point. Once the calendar turns, you just don't have as many moves on the board. There are still a couple of things though that you can do, even though it's 2022. The two biggest opportunities are probably making a contribution to your IRA, as long as you meet the income requirements and as long as you haven't maxed out your contributions already for 2021, you can generally make an IRA contribution up until the due date of the tax return, which is April 15th. Another one that is available is again, as long as you haven't maxed out the contributions, if you have a health savings account, that's another one where you can still make a contribution up until the due date of the return and take a deduction on your 2021 tax return.
David, as you know, in Washington, the government giveth and the government taketh away. People got stimulus checks and those child tax credit checks this year. What's going to happen when they file their taxes?
Well, with the stimulus checks are not taxable income. However, you need the stimulus checks in order to calculate what is referred to as a recovery rebate credit. So, a recovery rebate credit could make it so that you actually get more money back in 2021 for your 2021 return. So, it's important to hold on to that letter that you're going to be receiving from the IRS telling you how much that you actually got for your stimulus check in order to make sure that that calculation is correct. So that could end up being more money if you received a stimulus check, but it's never going to be anything less. However, on the other hand, the other one that you mentioned is the advanced child tax credit. The advanced child tax credit payments actually were like as if you were taking your refund in advance. So that could end up in less of a child tax credit, less of a refund than you may be normally used to.
David, here's the one that I hear a lot of people say doesn't make sense. We went through a pandemic. We're still in a pandemic. People said, I can't work in my office building, so I'm working at home. And yet the IRS is telling people over and over again, guess what? That home office that you set up, that Zoom room that is rated on Room Rater, it's not a taxable deduction. Why?
I have to tell you that that one is still a little bit of a mystery to me as well. We got rid of the home office deduction for most taxpayers, for most people who are employees. In other words, you're working for someone else. We got rid of that tax credit as part of the Tax Cuts and Jobs Act back at the end of 2017. So that one has been gone for a while for employees. Now, if you're self-employed, then you can still generally utilize a home office deduction. However, if you are working for someone else, that's one that's not available to you. One thing to keep in mind as a result of that is if you are spending money out of pocket in order to furnish your home office, then it may be worthwhile to go to your employer and just say, hey, I'm spending money out of my own pocket and I can't deduct anything as a home office deduction because the federal government says I can't. Is it possible to get reimbursed for some of those costs? That is what I've been advising a lot of my clients to do in light of the fact that there's no home office deduction available.
David, is there a waiver letter that we can get from employers? Because the IRS is saying if you're using your home office, it's an unreimbursed employee business expense. Your employer should pay it. That being the case, if your employer doesn't pay for that square footage in your house, can I get a waiver letter from him saying, hey, I'm just not going to pay it. You pay it.
Yeah, unfortunately, that's not something that's available right now, and so that's why I think talking to the employer about it and trying to just make your case to them that that this is money that's coming out of my pocket in order to make sure that I can do my job. I think Most employers, I hope anyway, are open to that idea that they know that individuals can't take a home office deduction anymore if they're an employee, and hopefully they will be open to reimbursing that cost. Generally speaking, on the employer's side, as long as the home office expenses, as long as they're ordinary, necessary, and reasonable, the employer can deduct those costs. So it is something that they are able to deduct on their side if they choose to reimburse it, again, as long as it's ordinary, necessary, and reasonable.
So before I let you go, what would be necessary, ordinary, and reasonable?
That is a term that is going to be based on facts and circumstances, but there's a lot of kind of simple rules that come to mind. I mean, if I'm a law firm and I'm trying to maybe deduct the cost of a bulldozer, that's probably not ordinary, necessary, and reasonable. So just kind of what is customary for a particular business is ultimately what we're looking for there.
Yeah. Financial advisor, tax expert David Peters, ordinary and reasonable. David, thanks for being with us.